I still remember the feeling. My hands were shaking as I stared at the digital board on the screen. The red numbers danced like mocking laughter, constantly draining the money I had worked so hard to save over the years. I had just officially lost over $10,000, all in less than 2 weeks. I didn't cry. I didn't scream. I just sat there, stiff, like an idiot standing in the middle of a financial market, having learned the most expensive lesson of my life. My story doesn't start with "I've been passionate about finance since I was a kid" or "my parents taught me how to invest when I was 15. I'm just a regular person, like you. A 9-to-5 job, student debt, a vague dream of financial freedom. I started getting interested in investing when the COVID-19 pandemic hit. The world was in turmoil, the markets crashed, and then, something strange happened. After the early 2020 crash, stocks started going crazy. I saw my friends making money. I saw financial YouTubers talking about doubling their accounts in just a few months, and I thought, why not me? I threw myself into studying. I read books, watched videos, joined investment groups. I started opening an online brokerage account and funded my first savings, $2,000, then $3,000, then $5,000. I thought I had seized the golden opportunity. At first I invested in tech stocks, Tesla, NIO, Palantir, Coinbase. All the hot names at the time. And really, in the first few months, everything went like in the movies. My account increased by more than 40%. I was drunk on the feeling of victory. I started to believe that I had a gift for investing. Then I started playing bigger. I learned about options trading. I watched videos about day trading. I wasn't investing, I was gambling. I remember one day, I placed a $1,500 call option on a stock that had just gone public. It dropped 20% in an hour. I lost everything, but instead of stopping, I carried the loss and kept adding more money to recover. I lost control. Eve. When I started my investing journey, I simply thought, choose good stocks, buy when the price is low, sell when the price is high, and that's success. The reality? It's not that simple. I'll tell you specifically every step I made wrong and the lessons I learned from it. Because I believe, understanding why you're wrong is the fastest way to get closer to true success. Honestly, when I started, I didn't have a strategy. I entered the market with the mentality that if everyone can do it, I can do it too. I saw people sharing 200% profit with Tesla, 300% with Bitcoin. I thought, I don't want to be left out of the game. So I started buying. I didn't analyze the financial statements. I didn't understand what the company did. I just saw a hot name and bought it. The first stock I invested in was Palantir, PLTR, because someone on Reddit said it was the second Tesla. I had no idea what Palantir software offered, or whether it was profitable. But I put in $2,000. A week later, the stock dropped 15%. I didn't understand why, but instead of selling, I bought more. Because I thought, the price drop is an opportunity. Mistake 1, investing without understanding the company. If you can't explain in 30 seconds why you bought a stock, you shouldn't buy it. When the market was red, I wasn't scared. I was excited. I saw it as a dip to buy more. But I bought without a plan. I remember one time, Coinbase had just IPO. I jumped in at $380 per share, then it dropped to $320, then $290, then $250. I kept buying more. And finally, it plunged below $200. I lost almost $3,000 on this stock alone. Mistake 2, not knowing how to cut losses. No risk management rules. I didn't set a limit for losses. I thought buying more is smart, but in reality, I was just sinking deeper. Emotions control me every day. The day my account increases, I get excited, confident, open the video which stock will double in the next month. The day my account is red, I panic, bear the loss, look for the video what to do when losing 30%. I don't have a clear investment goal. What am I investing for? Retirement? Buy a house? Financial freedom. How much risk am I willing to take? How long do I hold the stock? No answer. Mistake 3. No clear strategic framework. Investing is not like gambling. To win long term, you need a system that suits you, discipline, and patience. Reddit, Twitter, YouTube, TikTok. Everywhere there are people giving stock picks of the month. Sensational videos with titles like 3 stocks that can increase 10x this year. If you don't buy this, you will regret it for the rest of your life. I believed them. I thought they knew more than me. But I forgot, they are not responsible for my money. Mistake 4. Trusting others more than yourself. Information is good, but investing must be your own decision. Learn to understand. Don't entrust your thinking to anyone. My portfolio at that time consisted of 4 stocks, of which one code accounted for 60% of my account. When that stock dropped sharply, I drowned. I also had no cash reserve. I put all my capital into the market. Mistake 5. Not diversifying. Not managing risk. One slip and you lose everything. If I had properly allocated my assets, I wouldn't have lost so much. Big lessons I learned. 1. Investing is a long-term game. I used to think I could get rich in a few months. Now I know. Investing is a 10-20-year game. 2. Don't try to beat the market if you don't understand it. Beginners should start with simple instruments like ETFs. 3. Losing is not scary. Not learning from it is scary. I lost $10,000, but if I hadn't lost it, I wouldn't have learned how to invest properly. After all the failures, confusion, and sleepless nights due to heavy losses, I realized that I could no longer continue investing like a gambler. I needed a sustainable strategy. A method that suited me. No time to watch the electronic board every day, not good at technical analysis, but wanted financial stability and freedom in the future. And then, I found 2 things that changed the whole way I invested: ETFs and long-term investment philosophy. After losing nearly $10,000 from individual stocks, I sat down and asked the question, is there a safer way to invest, without having to choose stocks and still grow? The answer came from legendary investors like Jack Bogle and Warren Buffett. ETFs, index funds. The first ETF I chose was Vanguard SP 500, though. Why? It tracks the 500 largest companies in the US, meaning I'm investing in the US economy, not individual companies. Management fees are extremely low, only about 0.03%. A history of steady growth of 8 to 10% per year over the long term. I invest in VO regularly every month, called the DCA, dollar cost averaging, strategy, putting out a fixed amount regardless of whether the market is up or down. The result? After 1 year, the account is no longer bleeding. I see the balance increase steadily, and most importantly, I am no longer stressed. After ETF, I continue to build my own investment portfolio according to the following principles: 70% stable ETFs, VO, VTI, QQQ. This is the core, helping me grow steadily and reduce risk. 20% blue chip stocks, Apple, Microsoft, Visa, businesses that have proven their strength over time. 10% risky investments, growth stocks, crypto. This is the spice, although small, it helps me not lose. Inspiration. This strategy helps me balance between safety and opportunity, between stability and breakthrough potential. Before, every time the Fed met, interest rates changed. I panicked. Now, I understand, the market is always volatile. But my financial goals do not change. So, I do not react to the news. I follow a long-term investment plan, save 6 months of living expenses and emergency savings, invest at least 20% of my income each month, prioritize retirement accounts, Roth IRA, 401k. Do not withdraw investment money unless there is a very serious reason. I also use apps like M1 Finance or Fidelity to automate my investments every month. Less emotional, more disciplined. Not every month is up. Not every year is profitable. I lost 3% in 1 month. I gained 7%. I went sideways in 1 year. But when I looked back at VO's 10-year chart, I understood, real profits come from time in the market, not market timing. I stopped trying to buy low and sell high. I let my money work for me. In stable assets, I realized that I don't like to monitor the market every day, easily influenced by emotions and news, love stability, hate high risk. So I don't choose surfing, day trading or short-term investing. I choose to invest passively, regularly, and aim for financial freedom after 10 to 15 years. Where am I after 2 years? My ETF portfolio grew 9% last year. I no longer buy highs because I gave up chasing trends. I have an emergency fund, a retirement account, and peace of mind every morning. I didn't get rich quick. But I did. You don't need to be an expert to invest successfully. You just need a simple strategy, discipline, and the patience to execute it. I lost $10,000 learning this lesson, but it helped me find an investing style that keeps me going every day, whether the market is up or down. One day, I looked at my investment account balance sheet. For the first time in nearly 18 months since I lost $10,000, I didn't feel rich. But I felt secure. My money was growing steadily, little by little. Not because I was lucky, not because I was more talented than anyone else, but because I was more patient than I had been in the past. I no longer lived in fear of losing my job, of unexpected emergencies. I knew, even if I lost my source of income tomorrow, I would still be fine for at least 6 months. That's when I understood that financial freedom is not about millions of dollars, but about no longer being afraid of money. If you're just starting out, here's what I wish I'd known earlier. Know yourself before you know the market. If you're prone to panic, don't invest in volatile stocks. Pick an ETF, make regular deposits, and forget about it for 10 years. No one gets rich in 3 months. If someone tells you that you can double your account quickly, you should run away. Investing is a journey of years, not weeks. Starting early is more important than starting right. Don't wait until you have enough money. Start with $50, $100 a month. The power of time and compound interest will take care of the rest. Losing is not failure, it is tuition. If you lose $100, $1,000, ask yourself, what is the lesson? If you learn, you win. I am not an investing genius. I am not good at analyzing businesses. I have never been in at the right time, out at the right time. Start today, even if it's just $100. But I persist, I invest consistently every month, I learn every day, and I don't give up after a stumble. I know how much money I need to retire. I know I'm getting closer to that goal every month. I don't live to show off my portfolio. I live to spend time with my family, do the work I love, help others get started investing like I wanted to help them. I want to say this to you, who are watching and may have just experienced your first loss. You're not stupid. You're not bad. You're just learning how to be better. I lost $10,000. But that's how I built a solid investment strategy. Don't let one stumble make you give up. The market always gives you a second chance. if you're patient and humble enough to start over, before you invest in ETFs or stocks, invest in your mindset, read a financial book a month, record your weekly expenses, set a savings goal of 10 to 20% of your income, track your investment progress using Google Sheets or an app. The more you understand money, the more it will work for you. After nearly 3 years of serious investing, I still have a lot to learn. But I do know this: investing won't change your life in 3 months. But it can change the rest of your life if you start today. You don't need a lot of money. You need faith, a plan, and time. If I, a person who lost $10,000, could pick myself up and start over, so can you. Don't invest emotionally, choose a strategy that fits your personality. Invest consistently, whether the market is up or down. Prioritize ETFs and index funds if you are new. Financial freedom is the result of discipline and patience, not superior intelligence. Speech balloon: if you have ever lost, ever given up, share your story in the comments. Direct hit: and if you want me to share the details of your current investment portfolio, leave yes under this video. I am not here to teach you how to get rich, but to learn with you how to go the long way with personal finance. Because no one can invest for you in the future you want.